TC Energy is one of the largest pipeline operators in North America. Over 53 years of uninterrupted dividend payments and currently a dividend yield of over 5%. But the high level of debt remains an issue. In this video, we'll take a close look at the fundamental data and clarify where potential buyback zones might be. The business model. TC Energy operates over 93,000 kilometers of gas pipelines in Canada, the USA, and Mexico. About 97% of the revenue comes from regulated contracts or long-term agreements. This ensures predictable cash flow, regardless of the gas price. Currently, there is a dividend yield between 4.8 and 5 and over 5% dividend yield. The payout history is impressive, with 53 consecutive years. The payout ratio is at 88% of profits. Relatively high, but not unusual in the midstream sector. So now let's take a look at where my entry point was. This was at 41 euros and 88 cents. In total, I hold 6.03 shares. Currently, I have an unrealized gain of 6% and a dividend that I have already received of 4.75 euros. The dividend yield. Over 5 years, we have a dividend growth of 5.32%. Over 10 years, it's even 7.12%. The 52-week high and low are between 37 euros and 45 euros. Currently, we are at 44 euros and 51 cents. Analysts have set a target here of 41 euros and 40 cents. The current dividend yield is 4.76% with a payout ratio of 88.25% of profits. Revenue and profit for 2025 are expected to be around 14.3 billion Canadian dollars with earnings per share of over 4.2. Analysts expect slight growth over the next 5 years. With over 59 billion in debt, the balance sheet is heavily burdened. The goal is a debt to EBITDA ratio of 4.75, which requires continuous debt reduction. The current projects and growth. The project backlog amounts to 28 billion Canadian dollars. A key project is the strategic gas pipeline, which will generate toll fees starting July 2025 and directly bring in additional cash flow. In addition, TC Energy is expanding its business in gas-to-power projects and data infrastructure. This is an area that could experience significant growth in the future due to demand from AI and servers. The current valuation, a current PE ratio of 17 and a PEG ratio of 0.75 indicate an attractive price-to-growth relationship. Compared to the industry, TC Energy does not appear overpriced, especially due to its stable cash flows. Now let's move on to the peer comparison. Market capitalization. TC Energy at 53.5 billion, Enbridge at 104 billion. The current dividend yield. TC Energy at 4.8% and Enbridge at over 5%. Profitability. TC Energy has an ROE, that is a return on equity, of 16% and an ROI, or return on investment, of 5%. For Enbridge, it's 10% for ROE and 5% for ROI. Debt. TC Energy at 59 billion. For Enbridge, it's 101 billion. So TC Energy is stable, but with a debt risk. This data was analyzed using Investing Pro. You can find the affiliate link below in the video description. Now let's move on to our new point, namely the buyback zones based on technical analysis. So let's take a look at the whole thing on a monthly chart. Currently, we are rather in the higher range. Here too, I would first mark the important zones, so to speak, that could be significant, where the market might tend to move, and where there would also be support and resistance. So this is the chart of TC Energy, as I said, on a weekly basis, and my potential repurchase price would be like this. So where would I generally consider buying more now? Ideally, my next purchase ratio would be at the 61.8 Fibonacci level. That means at 54.33 Canadian dollars, I would definitely want to get back in, but I'd also be happy to do so a bit earlier here. That would also mean a further price drop of 14%. The next one would then be roughly here at minus 20% and then at 25%. So you can roughly keep that in mind. Of course, these are Canadian dollars. Let's take a quick look at all of this in euros, just so we know what the current price would be, so to speak. So as we said, 10 and 20% once down here. That would put us at 39 euros and 59 cents. At minus 20%, we would then be at 34 euros 70. Those would more or less be the buyback zones, based on which I would practically make additional purchases. Or, as I said, at the 1.618 Fibonacci level, that would be minus 30%, and then we would be here at about 30 euros or 29 euros 87, just so you have a reference point in the end. TC Energy is not a high growth stock, but a classic dividend payer with enormous stability. Anyone looking for cash flows and willing to accept high levels of debt will find a reliable midstream stock here. Compared to competitors like Pembina or Enbridge, TC Energy appears solid. For me, it's a stable cash flow anchor in the portfolio where the buy zones should be clearly defined. I would appreciate it if you subscribed, gave a like, and left a comment about which pipeline stock is your favorite. I'm looking forward to part 3 of the pipeline series and wish you successful investing.